afternoon and good morning, everyone. It's January 20th, Tuesday. Welcome to Morgan Stanley Asia TMT webcast. My name is Charlie Chan. Please note this event is for Morgan Stanley institutional clients and financial advisors only. This event is not for the members of the press. If you are a member of the press, please disconnect and we will reach out separately. Please note this webcast and your question may be recorded. Today we have a lot of topics to go through, mainly on the logic foundry, which is TSMC and CapEx outlook. So myself and Walaki-san will go through that part. And second big session is a global memory. Liu Duan and Daniel will talk about the recent memory industry updates. Last but not least, Gary Yu will talk about China Internet 2026 outlook. I think lots of China AI is happening. So let me kick off with TSMC results recap. So I think there are significant kind of outside of the revenue and CapEx guidance. So I would say interprint TSMC, it's a guidance to be like revenue to be up 25%, CapEx around $50 billion. But after our kind of post earnings conversation with management and also some industry context, I think there are some upside because for the revenue, it seems like TSMC can squeeze out more productivity, especially for the second half. That's high. It's just because more productivity. So TSMC's full year revenue can reach like a 35% level. And CapEx, I think a similar reason. So interprint, I think the consensus is around $50 billion. But it seems like TSMC decided to, speed up the infrastructure, especially in the U.S. And also, we suspect that the TSMC should prepare some equipment because if you look at the EUV data points, right, next year you will have like 40%, 50% jump of the EUV units. So we think that TSMC may want to smooth out the CapEx a little bit. So anyway, that's a kind of a revenue CapEx guidance were very, very positive, not just to TSMC, but also the global tech supply chain. However, there are also some points that I wanted to clarify here. For example, if you look at AI, it's definitely remains to be very strong. But the comments on the non-AI, especially PC and smartphone, sounds a little bit too optimistic. So clarify with TSMC mentioned a little bit about why they are kind of a little bit optimistic. So first of all, TSMC focus on their wafer revenue, right? So those are high-end segment, especially Apple, iPhone, demand is still pretty resilient, even with the memory price hike. They didn't comment about the mid to low end, right? They just said that customers haven't changed their behavior, right? So I would say that there's a definitely very big challenge for mid to low end smartphone, and there should be a shipment down like 10% year on year. But TSMC don't really want to speak for their customers. And secondly, even your MediaTek or Qualcomm, you see the demand downside for certain end markets, like low-end markets. You probably wouldn't want to cancel the wafer booking at TSMC, given 3 nanometer is in a severe shortage. So I think that's the reason why TSMC's tone on PC smartphone sounds a little bit aggressive. So anyway, I think very soon there's a smartphone PC supply chain, players will report their earnings. We will see the comments. And lastly on TSMC, it remains to be our sector topic. Because if you look at companies' gross margin, it's a kind of significant upside for the long-term margin. It's like 65% as a new norm for gross margin. So with that, it looks like stock is extremely attractive at only 16 times P multiple next year. So the only thing you need on this assumption is really the catalyst, right? So I think the coming call, CSPs, AI CapEx, there's a key customer, NVIDIA, Broadcom, whether they want to revise up the GPU or ASIC TAM. I think even the GTC event in March, right? I think those could be the new catalyst. Yeah. Otherwise, I think fundamental is pretty strong on TSMC. So with that, I will hand over to Wadaki-san, the implication to Japan Semicap. Wadaki-san, over to you. Thank you.
Thank you, Charlie. I'm Wadaki. I cover Japanese SP sector. And as Charlie said, Japanese SP maker received great volume of the inquiries from TSMC. And each semiconductor equipment maker said that this fiscal year, 2020, end of March 2027, their sales to TSMC will increase more than 30% and 40%. So they started the procurement. And Tokyo Electron and RAM AMAT supply chain companies are now receiving great volume of the orders. And Tokyo Electron Kokusai also says that Samsung now gave that great volume of the order every week to these companies. So Kokusai also looks like interesting. And yeah, TSMC related Japanese SP company is Screen and Ebara. And Tokyo Electron, yeah, their business environment really improved. From mid of 2022, their factory utilization have been keeping around 70%. But from this January, Tokyo Electron's factory utilization recovered to 100% since more than 3 years ago. So Tokyo Electron is very bullish on their business outlook, and they will give the positive business outlook in next earnings conference. And so I think Tokyo Electron supply chain company looks like interesting. We should pick up as soon as possible these companies if stock price is delayed. So candidate is a CKD, Oliver, NGK, Shimazu, Daiken, Marumae, Tokaro, Lotte, and so on. And now, ENIVT receiving strong inquiries. So I expect that CapEx will start again. So I pick up Ushio now, but uncertain. So orders are not fixed, but I think evident supply chain looks like interesting. And Disco, their business environment also improved much. Every time Disco says their factory utilization have been keeping 100%, but not true. From last April, they are entered in deep slump. Their inquiry is only become 50% from peak level. But their factory utilization and inquiries improved from this October. And from this November, their inquiries recovered peak level again. So I expect that Disco will give more positive comment in tomorrow's earnings conference, and we can expect more upside of their earnings result and their guidance. So I'm very bullish on Disco now. So totally, Japanese semiconductor equipment business environment improved much, and really they are now entering hot summer, exciting condition. So I should pick up this Tokyo Electron, Screen, Ebara, and related supply chain company. That's all. Thank you. I pass back to Charlie.
Thanks, Wadaki-san. So I tend to think that TSMC need to be aggressive on CapEx. Not just that the AI demand is so strong, if they are too conservative, they may lose their market share in the long term. But secondly, I think logic and memory, probably they're competing for a very precious equipment kind of resource, right? So I think TSMC definitely need to intensify its CapEx at least for the coming 2 years. So with that, maybe we'll switch gear to memory and to look at how strong this memory cycle is going to be. So Duan, over to you. Thank you.
Yeah, sure. Thank you, Charlie. So we published a report last week highlighting the memory as the next bottleneck for AI. So as we see that AI has shifted from training models to running them at scale, especially inference and agentic AI, performance is increasingly determined by how fast and how much data system can access. So not just how many flops they have. So longer text windows, multimodal workloads, and also those autonomous agents will dramatically increase memory requirements. And in fact, memory is now the gating factor for AI's scalability. So what we are seeing in the memory supercycle in the near term is that unsurprisingly keep the pricing expectations being revised up. But we think what we are seeing is that we think that it matters less now because suppliers still holds the bargaining power as the inventory is depleting across the supply chain, and also the pricing negotiation will be getting more and more aggressive, accelerating into second and third quarter in terms of DRAM contract pricing year over year. So stock fundamentals, we don't see any cracks in the narratives yet. But what we are trying to figure out in this report is that how much inference time could this imply? So we do running a model exercise of expanding KV cache to what's now as the live KV cache, which is mainly stored in DRAM and HBM, which get wiped out quickly, to more reused KV cache, which gets stored in the ESSD rack that can be stored from 1 day to 7 days potentially. And this implies that the AI inference TAM for text-only usage alone would consume roughly 35% of global DRAM supply and over 90% of the NAND supply in 2026. And in practice, we are seeing a much larger GPU deployment for the same amount of the active users that we are assuming. So this means that our current calculation is still underestimating how much HBM and DRAM that we could potentially use. In terms of the stock implications, Samsung Electronics is still our top picks in the memory sector, but I also want to highlight for another SPE play as ASML. So because tighter memory supply would directly drive higher EUV intensity. As DRAM makers move to advanced nodes, EUV layers are rising sharply. So we are seeing SK Hynix and Micron adopting up to 6 EUV layers, and Samsung competing aggressively for tools access and across both memory and foundry. So EUV capacity is limited, and ASML is the sole supplier. History matters here because in the previous cycle, which is 2010 to 12 cycle, we see constrained EUV availability reshape the industry economics, with early access determined by strategic commitment rather than price. So we are seeing a similar setup today, but this time it's driven by memory, not logic. So with memory capex is set to accelerate and EUV becoming a strategic asset, ASML will sit at the center of the AI infrastructure build out with multi-year earnings visibility that market currently still underappreciates. I'll stop here and then pass it back to Charlie. Thank you.
Hi, morning everyone. So I think Charlie should have some technical issue, but this is Daniel. I will continue the discussions on the memory side. First, we want to reiterate our bullish view on the Greater China memories. This is a preference order for across our coverage. There's no change on our view. We believe there's no reason to turn negative right now. Last week, we published an update note on all the old memories. We revised up all the memories, names, earnings, and price target. Our topic among the Greater China memory names remain Winbound. So first, on DDR4, we are seeing this kind of low-end DRAM actually become a direct account from a lot of enterprise customers. To note, in the past years for DDR4 or legacy DRAM, usually the procurement is mainly done by the ODM or OEM, not directly from end customers. But now, we believe even for NVIDIA, they are trying to securing the DDR4 supply, directly securing all the supply from the vendors, even in Taiwan. So this is very critical, highly likely to push out the D4 pricing further. Also, DDR4 pricing right now, negotiations on the monthly basis. So as we move from January to February to March, we are likely to see ongoing pricing upside. That's the reason why we are still very bullish on the DDR4. There's no reason to turn negative. On NAND, for the companies in Greater China, they are mainly doing the MLC NAND and SLC. For MLC NAND, we continue to see Samsung is ramping down the supply into January. Samsung told the supply chain last October they want to ramp down, and now they are executing it. Not only Samsung is ramping down, but we are also seeing Micron reducing the MLC NAND supply because they want to do more advanced process. So because of this, we do see the supply-demand gap for MLC NAND could be more than 30%, which means the pricing needs to go up 300%. From Greater China names, we do think the major beneficiary will be Micronics, because they are the only one with MLC capacity right now. Last but not least, we look at NOR Flash. The pricing hike already confirmed to be 30% in 1Q from leading company like Winbound. And we do see this 20 to 30%, so double-digit pricing hike will continue in the following quarters in 2026. Because of this, we do see there are more earnings upside even into 2Q and 3Q. That's the reason why we don't think it's a time to take profit. On the same side, we are also seeing on the cloud, demand continue to be very strong from general server. I think that also underpins the DDR5 demand as well. Low teens growth for general server in 2026 remains our assumption. We are also seeing from the TPU supply chain, there are more adoption, more content, which also benefit the company in Taiwan. Substrate supply, we do see there are some qualification on the low end, E-glass, which could alleviate the constraint a little bit. So that's the reason why we also revised up our A-speed price target last week, and we want to reiterate our overall rating. Let me stop here and hand over back to Charlie.
Yes, thanks, Daniel, and also Liu Zhuan on the memories, new memory and the old memory. So just a few words on MediaTek results yesterday. So again, I think the company guided first quarter price hike very conservatively, like 20%, something like that. But we have after earning discussion with management, and they tend to gradually revise up their contract price to match the spot price, right? So maybe not like a sudden jump of the price, but they will gradually catch up. So we're still very confident about this DDR4 upcycle. So we finished the kind of semiconductor hardware parts, and we do believe global CSP, including China CSP's AI CapEx guidance, will be the next key events calendar. So Gary also published his 2026 China Internet Outlook. So we will move the topic to China Internet side. Gary, over to you.
Thank you, Charlie. So we published our 2026 outlook for China Internet yesterday. There are a couple of things that we want to highlight. First is probably the most obvious one, which is AI. We are still very bullish on the overall AI development in China in 2026. I know last year was the DeepSeek moment, and the Morgan Stanley TMT team also published a blue paper on China's AI path last year in May. But then, based on our channel checks in the first week of January, during our China Internet trip, we are on AI development going to 2026. And this comes from both the supply side and also the demand side. On the supply side, we think that last year, the lack of chip supply and the lack of supply chain support was the main hurdle. This year, we are seeing potential improvement on both the U.S. chip import front and also the domestic chip production capacity. And therefore, at least compared to last year, we think that there will be significant improvement on both ends. And from the demand side, we are happy to see that the model scaling continued to improve in China, which is same thing that we saw in the U.S. So, for example, we worked with both foundation model company like Zhipu and also internet company like Alibaba and Kuaishou. What we observe is that whenever there is a new model iteration, which are getting more frequently nowadays, there is a step increase in revenue generated by those models. And we've seen it in Zhipu, we've seen it in Kuaishou Kling as well. So we are more confident to see as we getting more and models upgrade this year, we continue to see step up in revenue generated by AI. And at the same time, we are also seeing improvement in application and availability of consumer-facing application as well. Last year was probably all about Doubao from ByteDance, which has already seen quite a high increase in adoptions. But then at the beginning of this year, we have also observed Alibaba launching or did a major upgrade on the Quen apps, connecting with the entire Alibaba ecosystem to provide a consumer-facing AI agent. We also expect Tencent to do the same sometime in the middle of this year, after they have recently had a major kind of talent upgrade to improve their model capability. So all in all, we think that supply and demand will continue to support AI development in 2026, and therefore the top pick for us in China Internet remains number one Tencent, number two Alibaba, which are the clear AI beneficiaries. The second thing we want to mention is that domestically we're seeing higher macro risks because consumption started to slow down in fourth quarter of last year. Competition remains intense, not just from food delivery, but also a lot of areas facing ByteDance disruption, and also emergence of higher regulatory risks with C-TRIP antitrust investigation beginning of the year. And as a result of that, we think for companies to move overseas or expand overseas become a lot more important. Revenue from overseas already contribute to more than 10% of China Internet overall revenue last year, and we think that is also going to expand going forward. And by business includes not just the traditional ones like games expanding overseas or cross-border e-commerce in the form of Temu or OTA, Trip.com from C-Trip. But we are seeing also across the board more and more companies moving overseas, including food delivery from Meituan, robotaxi for Baidu, cloud for Tencent and Alibaba, AI models for Quen, and also AI applications going abroad as well. So that's the second theme that we will focus on. And just lastly, in terms of stock call, besides Tencent and Alibaba, which are our top two pick, we also like PDD and Tencent Music after the recent corrections. So PDD now trade at 10 times or even below 10 times PE, Tencent Music at 16 times. I think both are very attractive after the recent correction, and therefore these are the two names that we will continue to recommend buying. And just lastly, on the potential negative side, we still have underweight on JD and some equal weights on large liquid names, including Bilibili, Kuaishou, and Baidu, where I would say Baidu in particular is, quite a counter consensus one, because we think buy side and other sell side brokers are a lot more positives on the quantum SIM spin-off. So with that, why don't I stop it here and pass it back to Charlie.
Thanks, Gary. Yeah, so we do have a question for you. So maybe we start from you for the Q&A. So Gary, what are your thoughts on the H200 shipment being held up at a customer over the weekend? Does that change your base case on the chip supply for China CSPs from government intervention? Thank you.
Sure. So again, based on our visit in the first week of Jan, first of all, the Chinese government has not officially approved the import of H200 or, allowing the hyperscaler to purchase H200 from the hyperscalers. But most companies we met with at least optimistic that, with some conditions, maybe a quota limit or maybe a certain ratio between U.S. versus domestic chips purchase, there will likely be some, approval for these hyperscaler to buy H200 from NVIDIA. It actually came as a surprise to us that the news mentioned that there is already some shipment to Hong Kong right now, because, we know that the government has not yet approved. We are only optimistic that at some point in time, most likely first quarter of this year, there will be some, sort of approval with certain conditions. So we're still cautiously optimistic that, it will not be a hard stop or hard ban on H200. But before we get an official green light from Chinese government, we won't be, expecting an official, green light for them to, ship these chips to cross the custom or border through official channel to China immediately. But anyways, because last year there was zero, import from NVIDIA through the official channel since April. So any quota, any condition that would allow hyperscaler to have access through the official channel this year will be incrementally positive. So we are still optimistic on that front. And also what makes us more optimistic this time around compared to last year was that, H20, which was banned last year, was more for inferencing, where you already have replacement from domestic chips, which is what the government want to support. For H200, because it is mostly designed for training, and currently there's just no alternatives from domestic chips. So I think, that will significantly increase the chance for Chinese government to at least have some green light for hyperscaler. So that's our field for now. Thank you, Charlie.
Thanks, Gary. So from Taiwan foundry supply chain, we also haven't seen the so-called production cuts. So, report we said 2 million units of H200 could be produced. But again, to Gary's point, it's also subject to when CSP can get China government's approval. Maybe we kind of shift gear to other questions. So, Duan, what is the supply-demand gap currently for the memory? And what's the timing do you think that imbalance of memory will finish?
Yeah, sure. Thank you, Charlie. So for the supply and demand gap, currently we are seeing around 8% of shortage for DRAM and around 10 to 15% for NAND. So the channel check that we have is that the DRAM order fulfill rate for the CSP larger customers has being only 50% roughly, and for NAND this is around 60 to 70%. So we do still see that potentially they're going to add more orders in terms in order to get more allocations moving into next year. And for the supply and demand shortage, when will it rebalance? I think currently we don't see any very obvious signs for the trigger point for them to rebalance in the upcoming quarters. But moving forward, we are seeing we are closely watching the CapEx acceleration and also the initial color for other size estimates for 2027 to see how that will change into next year.
Great. Yeah, thanks, Lilian. So just some update information. For example, Micron announced to buy a small fab in Taiwan from Powerchip around 40K to 50K. But our understanding is that they wouldn't contribute to the production until maybe second half next year. So China memory is also something that Liu Zhuan and we watch very, very carefully. But again, that there's a supply chain supply dynamic is definitely something we'll pay attention to. Last question is about the who is absorbing the higher cost of the memory? Is that an ODM or customer? So I would say that from some recent ODMs results, like Wistron covered by Howard, you see some sort of gross margin impact. But also, I think lots of OEM also claim they want to pass through the memory cost to we as end consumers, right? So whether those kind of price hike will negatively impact the demand, that remains to be seen. But I think ODM and also consumer, we are also sharing the bill. Yeah, I think that's all from today's discussion. Thanks again for all the questions and all the insights from our colleagues. We conclude our webcast here. Thank you.